Welcome back to the AlgoBot channel, where we break down automated trading strategies for MetaTrader 5. I'm AlgoBot, and today we're exploring an expert advisor called Teager Energy Momentum Burst. This one borrows a tool from signal processing, the Teager-Kaiser energy operator, and applies it to price momentum. Instead of only asking where momentum is, it asks how hard that momentum is pushing right now. Over the next several minutes, you'll learn how the oscillator is built, how the energy burst is measured, how trades are opened and closed, and how it all comes together on a chart. Let's get started. Let's start with the big picture. Teager Energy Momentum Burst is a momentum ignition system. At its core sits an oscillator built the same way a MACD line is built, a fast exponential moving average of the close, minus a slow exponential moving average. When that oscillator is positive, the fast line is above the slow line, describing upward drift. When it's negative, the drift is downward. What makes this strategy distinct is the layer on top. It applies the Teager-Kaiser energy operator to that oscillator. This is a signal processing tool that estimates the instantaneous energy of an oscillation, roughly its amplitude combined with its frequency. In plain terms, it measures how forcefully momentum is moving, not merely which direction it points. A clean, directional thrust charges up a large energy reading, while choppy, sideways conditions cause that energy to collapse towards zero. Because raw energy would vary wildly between a calm currency pair and a fast-moving one, the strategy normalizes it by the average true range squared. That gives a clean, comparable reading, so a single threshold setting can serve different symbols and different time frames without constant retuning. The strategy is direction agnostic when it measures energy, meaning a strong down move charges just as much energy as a strong up move. Direction is read separately from the sign of the oscillator and the slope of the slow baseline. This is a trend-following approach at heart. It only engages a burst that agrees with the prevailing drift. Who is this style suited to in an educational sense? It's aimed at traders who are curious about signal processing ideas applied to price, and who prefer a rules-based system that waits patiently for a clear ignition rather than trading constantly. It runs on a single time frame, and a natural home would be a liquid major pair on something like the 15-minute or 1-hour chart. As always, this is educational information, not a recommendation, and every approach carries the risk of losing trades. Let's break the logic down into clear steps. The strategy first detrends price into a zero-centered oscillator, in the same spirit as a MACD line. It maintains two exponential moving averages of the close, a fast one defaulting to a length of 5, and a slow one defaulting to 34. The oscillator is simply the fast average minus the slow average. Next comes the heart of the strategy, the Teager-Kaiser energy calculation. Taking the last 3 oscillator samples, the energy equals the middle sample squared, minus the product of the outer 2. For a clean, directional thrust, this produces a large positive number. During choppy, indecisive conditions, it collapses towards zero. Importantly, this measure is direction agnostic, so direction is read separately. To make one setting work across symbols and time frames, the energy is normalized by the average true range squared, using an ATR period of 14. The result is a clean, comparable energy reading. Now the entry. The strategy watches for a fresh burst, meaning the normalized energy crosses up through the energy threshold, which defaults to 0.10. It was at or below the threshold last bar, and above it this bar. This way, the strategy signals once at the moment of ignition, rather than on every bar the move continues. A long signal also requires the oscillator to be positive and expanding, with the slow baseline sloping up. A short signal requires the oscillator to be negative and expanding downward, with the slow baseline sloping down. This trend gate is what keeps the strategy from taking a burst that fights the prevailing drift, and it's designed to help keep drawdown contained. Finally, risk management. When a position opens, the stop loss is placed at the stop multiple times ATR, 1.5 by default. The take profit sits at that same distance multiplied by the reward ratio of 2, giving a reward to risk of 2 to 1. Only one position runs per magic number at a time. On top of that fixed stop and target, an adaptive exit closes the trade early if the oscillator crosses back through zero against the position. In other words, If the underlying momentum flips against an open long or short, the strategy steps out rather than waiting for the hard stop. That adaptive flip exit is meant to trim losing trades and protect gains before the full stop distance is reached. Here's the core of the MetaTrader 5 code. At the top, we have the input parameters you can adjust in the strategy tester. FastPeriod and SlowPeriod define the two moving averages behind the oscillator. EnergyThreshold, set to 0.10, is the minimum normalized energy needed to call a burst. ATR period drives both the volatility normalization and the risk sizing. Stop multiple and reward ratio shape the stop loss and take profit, and there's a fixed lot size plus a magic number to tag the trades. Below the inputs is the decision block. The Boolean called fresh burst is true only when the previous energy reading was at or below the threshold and the current reading is above it. That's the upward cross we described. The variable slope measures the slow baseline's drift over the last bar. The long signal is true when the oscillator is above 0, rising, and the slope is positive. The short signal is the mirror image, with the oscillator below 0, falling, and the slope negative. When the long signal is true, the code reads the ask price, sets the stop 1 ATR distance below entry, sets the take profit at that distance times the reward ratio above entry, and calls trade.buy. When the short signal is true instead, it reads the bid price, places the stop above entry, the target below, and calls trade.sell. Both sides carry a short comment, so you can spot them in your trade history. That's the entire entry engine in just a handful of lines. Let's bring this to life on a chart. On the price panel, you'll see a smooth blue line running through the candles. That's the slow moving average baseline, the trend filter. Below the candles sits the energy panel, showing the normalized Teager energy in gold, with a dashed level marking the energy threshold at 0.10. Everything above that dashed level is the burst zone. Watch how the two panels work together. We open in a gentle uptrend. The first two candles push higher, and the blue baseline begins to tilt upward. On the third candle, the market pauses and coils, and notice how the energy reading down in the subpanel sags toward the floor while beneath the threshold. That quiet is exactly what the strategy wants before an ignition, because low energy means momentum is resting rather than trending. Then the ignition candle arrives. Price surges up with a strong bullish body, and in the panel below, the gold energy line spikes and crosses up through the threshold into the burst zone. That's a fresh burst. At the same moment, the oscillator is positive and expanding, and the blue baseline is sloping up, so the trend gate agrees. Every condition lines up, and the buy entry marker prints on that candle. The stop loss is tucked 1 ATR distance below the entry, and the take profit target is set at twice that distance above for a reward to risk of 2 to 1. The next two candles do the work. Price runs higher with the trend, extends its gains, and reaches the take profit target, closing the long trade in profit on this illustration. Notice the energy has already faded back below the threshold as the move matures. The burst was a one-time event at ignition, not a running signal, which is why the strategy signals only once and then simply manages the position. Now the market changes character. Price stalls near the highs, then rolls over. A couple of candles drift lower, and the blue baseline flattens and begins to slope down. The trend filter has flipped bearish. Just before the next move, the market coils again on the 10th candle area, and the energy in the subpanel drops back toward the floor, resting once more. Momentum is loading up quietly. Then the second ignition arrives, this time to the downside. A strong bearish candle breaks lower, and the gold energy line spikes back up through the threshold into the burst zone. That's another fresh burst. Here the oscillator is negative and expanding downward while the baseline slopes down, so the short conditions are satisfied and the sell entry marker prints. The stop loss sits 1 ATR distance above the entry, and the take profit target is placed twice that distance below. From there, price follows through. The next candles extend the decline, and the market reaches the downside take profit target, closing the short trade on this illustration. Step back, and you can see the rhythm the strategy is built around. It waits for momentum to rest, measures the energy of the next thrust, and only engages when that thrust is both strong and aligned with the baseline trend. The energy panel tells it how hard the move is pushing, while the oscillator's sign and the baseline slope tell it which way to lean. And remember, if momentum had flipped against an open trade, with the oscillator crossing back through zero, the adaptive exit would step in and close early, well before the hard stop was ever touched. This is an illustration of the logic, of course, not a prediction. Real markets will always produce losing trades alongside winning ones. And that brings us to the end of our breakdown of the Teager Energy Momentum Burst Expert Advisor. Today we unpacked how it builds a MACD-style oscillator, how the Teager-Kaiser energy operator measures the strength of each momentum move, how a fresh energy burst combined with a trend filter defines the entries, and how ATR-based stops, targets, and an adaptive momentum flip exit manage the trades. Remember, everything here is for educational purposes only. It is not financial advice, a recommendation, or a solicitation to trade, and every strategy will experience losing trades. If you found this analysis helpful, please like the video, subscribe for more MetaTrader 5 strategy breakdowns, and leave a comment with the strategy you'd like us to explore next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.